The UK regulator is to allow crypto-related securities. And so in this video, we're going to look at how the FCA has softened its stance on the sector by permitting Bitcoin and Ethereum-backed exchange-traded notes. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys, available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening, everybody, and another warm welcome back again to Enter Crypto with me, Chris Kenyon. Now, in today's video, we're going to be talking about the UK again, and the financial regulator is about to, they haven't yet, but they're about to probably allow a couple of crypto-related securities. And so in this video, we're going to talk about that. Now, as always, let's just quickly read through the article so we know what we're talking about, and then we'll comment after. So the UK's financial regulator will allow some Bitcoin-linked securities to be listed on the stock market in a softening of its tough stance on digital assets as investors around the world snap up funds investing directly in crypto. The FCA has said on Monday it would not object to the creation of Bitcoin and Ethereum-backed exchange-traded notes for professional investors. Issuers can apply to list notes that are linked to the Bitcoin and Ethereum coins on the London Stock Exchange from April, and ETNs are debt securities that track an underlying asset but are traded and settled through a central market entity like a stock exchange and securities depository. The news helped push Bitcoin and Ethereum higher. Bitcoin, the world's largest cryptocurrency, hit $72,000 for the first time, while Ethereum touched $4,000 for the first time since December 2021. The UK had become one of the last major markets to hold out against the trading of crypto-related securities, even though the government has been championing the country as a potential centre for digital asset markets. Now, in 2021, the FCA banned crypto-related derivatives, which included exchange-traded products, owing to concerns over the amount of leverage or borrowing available to consumers, and some operators offered as much as 100 times leverage on Bitcoin. The ban, which is also covered unleveraged securities, has drawn sharp criticism from members of the crypto industry who argue that the UK cannot become a leading market for digital assets unless retail investors are given regulated and easy routes into popular tokens such as Bitcoin. And it just goes on to say how other ETNs and especially ETFs or Bitcoin ETFs have been progressing in other countries like the EU, Australia and Canada. As always, I'll leave a link in the description box below if you want to, read further. And so these crypto-related securities, they're really derivatives, or you can call it kind of synthetic Bitcoin, as a lot of people call it, synthetic Ethereum, because it's not the real asset. And another thing is that this is only open to professionals and institutions only. This is not open to, you and me. There's actually regulations in the UK set by the FCA to stop anything like that, stop us from buying anything like that, and especially when there's leverage involved. We're not allowed to trade crypto with leverage, for example, in the UK. In the EU, you can. In the US, I'm not sure, but there's many places where you can. In fact, I think you can in the US, but I know in the UK you definitely can't. And that does seem unfair because we don't seem to have any problems in Europe with with leverage trading crypto. I know people lose money, but they also make money. That's part of leverage trading anyway, and that goes for the institutions as well. So I'm not sure why we need in the UK this sort of nanny, looking after, and the government's, overprotecting us and stopping us from doing all these things that the rest of the world seems to be open and able to do. And so it just seems silly. I mean, it just seems like the government is overreaching again and, looking for more ways to control. And this is just another way for them to do it. But for institutions and the professional traders, there is a market for this type of thing, certainly outside the UK. So I'm almost certain there will be within the UK. And it just, some people might be saying, well, why would they even get involved in buying a derivative of Bitcoin or ETH when it's all digital anyway? You could just buy the ETH, take it off the exchange. And it's all down to getting in and out of trades very easily. Sometimes institutional traders and professional traders will be in and out of trades using algorithms. They'll be in and out, thousands of times sometimes during a day, and you don't want to be paying fees. You don't want to be taking the taking the Ethereum off the exchange and putting it back on when you want to make a deposit. It's not like us as individual traders where we're doing it for ourselves and for our own families. They're just really looking for volatility to trade, and they don't care whether the asset is a Bitcoin linked one, a gold linked one. They're just looking for patterns and things to trade based on the volatility. So another interesting article there. As always, guys, thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.